Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. So, Steve, let's talk about this intriguing real estate listing in Richmond Hill. A seemingly average bungalow is going for almost $3 million. What's driving this price?
Janine, it's all about the land. The property at 91 Birch Avenue sits on an expansive 70 by 417-foot lot. That's over 29,000 square feet of prime real estate, practically a private park in a prestigious area like South Richvale.
I see. It's amazing how the value of land can overshadow the condition of the house itself. From what I understand, the house hasn't been updated much since the 90s and is considered a teardown.
That's correct. The kitchen and bathrooms are outdated, and the bedrooms still have that 1970s wood paneling. The structure's value is minimal compared to the potential of the land.
It's interesting to think about the possibilities for someone with a vision. You could build a dream home or even a mega mansion with space for amenities like a pool or tennis court.
And that's exactly why the asking price, though seemingly high, makes sense. Properties in that area have sold for well over $14 million. It's the location and the potential of the land that's really being sold here, not the current house.
I also read that the property has been on the market since 2023 with a price drop from nearly $3 million. It's selling for less than it was bought for in 2017. That's quite surprising.
It is surprising, but it reflects the current real estate market conditions. Even in prestigious areas, sellers are having to adjust their expectations. The market can be brutal, and pricing needs to align with what buyers are willing to pay.
It's a reminder of how dynamic real estate markets can be, and how important it is for buyers and sellers to stay informed and flexible.
Absolutely, Janine. This is why we do this podcast, to help our listeners navigate these complex scenarios. Real estate isn't just about the present, but about future potential too.
Steve, it looks like Mississauga's housing market is seeing some interesting shifts. The average home price has dipped below $1 million and home sales have increased. What do you think is driving this change?
Janine, from the data provided by Zoocasa and the Toronto Regional Real Estate Board, it seems the market is adjusting to the broader economic conditions. The average home price in Mississauga fell by 2.4% to $995,599, while total home sales rose by 3.8%. It's a classic case of supply and demand dynamics.
It's interesting to note that the average selling price in the Greater Toronto Area also dropped, yet sales have increased by nearly 11%. This suggests that buyers are taking advantage of the lower prices to enter the market or upgrade their homes.
Exactly, Janine. Jason Mercer from the Toronto Regional Real Estate Board pointed out that the Canadian economy is facing trade uncertainties with the United States, which is affecting the market. He also mentioned that further interest rate cuts could spur more home sales and positively impact the economy.
I can see how lower interest rates might encourage more people to buy homes, especially in a place like Mississauga, where properties have been in high demand. It's also worth mentioning that homes are selling slightly faster now, with the average time on market decreasing from 45 to 42 days.
True, but despite these positive signs, the months of inventory have slightly increased, indicating a modest rise in supply relative to demand. New listings declined by over 11%, and active listings were down by 3.3% compared to June. This might suggest that sellers are holding back, waiting for better market conditions.
And yet, detached homes saw the largest price increase among all property types in Mississauga, rising by 2.7%. But they're also taking longer to sell, which is an interesting contrast to the overall trend of faster sales.
That's right. The average days on market for detached homes rose from 25 to 31 days. This could be due to a decrease in new listings and increased competition, as noted by Zoocasa. Buyers might be more selective, especially with the economic uncertainties.
Meanwhile, sales of semi-detached homes and apartment condos have seen notable increases month over month, but their prices have actually declined. It seems buyers are more interested in these more affordable options, which could be driving the market dynamics.
Absolutely, Janine. Apartment condos, in particular, are selling more quickly now, with average days on market dropping from 43 to 34 days. This indicates a growing interest in Mississauga's most affordable property segment, which could be a response to the current economic climate.
It's fascinating to see how different property types are behaving in this market. Townhouses and condo townhouses, for instance, saw declines in sales, but the average price of townhouses still edged up slightly. It seems buyers are becoming more selective, taking longer to make decisions.
Indeed, Janine. The decrease in new listings and the increase in average days on market for these property types might indicate that demand is softening. This is a complex market with many moving parts, and it's vital for buyers and sellers to stay informed and adapt to the changes.
Steve, we've been hearing some exciting news coming out of the Greater Toronto area. July marked the hottest month for the housing market since the pandemic started. What can you tell us about this resurgence?
Janine, it seems the market is bouncing back with vigor. The Toronto Regional Real Estate Board reported a 10.9% increase in home sales compared to last year, with 6,100 properties changing hands. This is the most activity we've seen in July since 2021, signaling a strong rebound from the earlier months when buyers were more hesitant.
It's heartening to see that people are starting to make those important life decisions again, despite the uncertainties. I read that a lot of potential buyers were holding back earlier this year due to economic concerns, but July seems to have been a turning point.
Absolutely, Janine. Develle Morrison from Bosley Real Estate mentioned that buyers are coming to terms with the current economic climate as the new normal and are moving forward with their plans. The interesting factor here is the improved affordability, driven by lower home prices and borrowing costs, which is translating into more sales.
That's a positive sign. The average selling price did decrease by 5.5% from last year, which might be making it more accessible for many. But there's still a need for more relief, especially with borrowing costs, as noted by TRREB President Alekia Berry-Spruill.
Exactly. The demand is being fueled by these lower prices and relatively low interest rates compared to last year. The inventory is also growing, with 17,613 properties newly listed in July, up by 5.7% from the previous year. This increase in supply is crucial for maintaining momentum in the market.
It's fascinating to see how the market dynamics are shifting. There were significant increases in sales across all property types, with semi-detached homes leading the way at a 25.5% increase. It seems buyers are finding opportunities across various segments.
That's right, Janine. Detached houses saw an 11.3% increase, while townhouse and condo sales also rose. Jason Mercer from TRREB pointed out that the housing sector can be a catalyst for economic growth, especially with the trade uncertainties with the United States. Further interest rate cuts could potentially boost this sector even more.
It's a complex scenario, and while the momentum is promising, there's still a level of caution. Morrison mentioned that unless conditions change, we might not see this momentum continue into the fall. Some sellers are hoping to relist and get their price, but the economic picture remains murky for many.
Indeed, Janine. While July has been a strong month, the future remains uncertain. The Bank of Canada has kept its policy rate unchanged, but there are hints at potential cuts if economic conditions require it. For now, it's about watching the market closely and being prepared to adapt.
Steve, there's an interesting legal case that recently came to light involving a real estate transaction here in Ontario. The court found a seller liable for misleading buyers about competing offers. Can you shed some light on this?
Certainly, Janine. This case revolves around a seller who falsely claimed to have multiple competing offers for a property, when in fact there were none. The buyers were misled into believing they were in a bidding war, which led them to overpay for the property. As a result, the court awarded them damages.
It's quite concerning to hear about such misrepresentations. The buyers in this case lost the opportunity to negotiate a fair price uninfluenced by the seller's false claims. It's a reminder of the importance of transparency in real estate transactions.
Absolutely, Janine. The court's decision was based on the fact that only signed, written offers are considered valid under Ontario law. The seller's claims about other offers were deemed to be phantom offers, as there were no written offers capable of acceptance.
And the divisional court upheld this decision, emphasizing that oral statements or puffery do not count as legally binding offers. It's crucial for both buyers and sellers to understand what constitutes a valid offer in the eyes of the law.
Exactly, Janine. The case highlights the potential pitfalls of trying to manipulate the market with false claims. The buyers were awarded damages based on the loss of a chance to negotiate a fair price without the influence of these misrepresentations.
It's a good lesson for sellers to be cautious with their representations during the bidding process. Misleading potential buyers can lead to legal consequences, as demonstrated in this case.
Indeed, Janine, in heated markets, it's not uncommon for bidding wars to occur, but sellers must ensure that their claims about offers are accurate and legally valid. This case serves as a reminder that honesty is vital in maintaining trust and integrity in the real estate industry.
Well said, Steve. Real estate transactions can be complex, and it's essential for all parties involved to act ethically and within the law to ensure a fair and transparent process. Steve, I recently came across an article discussing some challenges that renters in Ontario are facing. It seems like securing a lease can be more complicated than one might expect, even for well-qualified tenants.
That's interesting, Janine. What seems to be the issue? Are landlords being overly selective, or is it something else?
Well, according to the article by Lindsay Smith, even tenants with excellent credit and solid employment are encountering roadblocks. Some landlords and agents are apparently interpreting the Residential Tenancies Act in creative ways, which causes unnecessary hurdles.
That sounds frustrating for tenants. What kind of creative interpretations are we talking about here?
Some landlords are requesting things like post-dated checks, key deposits, and even unannounced visits, none of which are allowed under Ontario rental law. There are also clauses that require tenants to notify landlords early if they plan to stay beyond a year, which isn't legally enforceable.
It seems like these landlords might be trying to secure more control over their rental agreements. But it's crucial to remember that tenants have rights, and these practices could be challenged legally.
Exactly, Steve. The article points out that despite these challenges, tenants actually hold a fair amount of power right now. In Southern Durham, for instance, there are over 600 rentals available, giving tenants plenty of options.
With rental prices slipping, tenants are indeed in a good position to negotiate. The Canadian average rent has dropped to around $2,125 per month, so renters should use this to their advantage.
It's definitely a tenant's market, but they need to be prepared. Having a current credit report, employment letters, and proof of on-time rent payments can help them stand out and avoid any unnecessary issues.
And partnering with a knowledgeable realtor can make a world of difference. They can guide tenants through the process and ensure that rental agreements are fair and legal.
Absolutely, Steve. It might feel like a reality show challenge at times, but with the right preparation and resources, tenants can secure a home without the headache. Steve, there's some exciting news in the mortgage industry. Informative research has integrated the Work Number Report Indicator from Equifax into its suite of mortgage credit and verification tools. This sounds like a significant step forward for lenders and borrowers alike. What are your thoughts on this development?
Absolutely, Janine. This integration is a game changer. By providing an early indication of an applicant's employment and income verification status through the Work Number database, lenders can make more informed decisions earlier in the mortgage qualification process. This is particularly important in a competitive market where speed and accuracy are crucial.
It's wonderful to see technology enhancing the mortgage process. The Work Number Report indicator gives lenders a more complete view of the borrower's financial profile right from the start. This not only streamlines the verification process, but also improves the overall borrower experience.
Exactly, Janine. Steve Schultz from Informative Research highlighted that this early indication helps streamline decision-making for lenders, enhancing operational efficiency and managing costs. It's about making the process as smooth as possible for both the lender and the borrower.
And Joel Rickman from Equifax pointed out that this collaboration gives lenders increased confidence in early loan assessments. It's all about providing a seamless mortgage experience, and this integration seems to be a step in the right direction.
Absolutely. With the current economic conditions and the competitive nature of the real estate market, having a robust system in place to verify employment and income is essential. This integration is a prime example of how technology can be leveraged to improve efficiency and accuracy in the lending process.
It's clear that Informative Research is committed to innovation and improving the mortgage process. Their layered approach allows lenders to match the right verification strategy to their loan workflow, ultimately benefiting everyone involved.
Indeed, Janine, this is a great example of how collaboration between companies like Informative Research and Equifax can lead to advancements that support the entire lending community. It's all about creating a more informed and efficient mortgage process.
It's encouraging to see these advancements in the mortgage industry. With more complete information available early on, borrowers can enjoy a more streamlined and transparent process. Innovations like these make a real difference in achieving homeownership goals.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.